Ladies and gentlemen, good day and welcome to the India Grid Trust Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shubdeep Mitra from Nuvama Wealth Management. Thank you, and over to you, sir.
Good afternoon, friends. On behalf of Nuvama Wealth Management, welcome you all to the IndiGrid Invest fourth quarter FY23 conference call. We are joined today by the senior management of IndiGrid, represented by Mr. Harsh Shah, CEO and Whole-Time Director, Mr. Naveen Sharma, Chief Financial Officer, Ms. Meghna Pandit, Chief Investment Officer, Mr. Satish Talmale, Chief Operating Officer. We will start with opening remarks by the management, followed by a Q&A session. I will now like to hand over the call to Harsh for his opening remarks. Over to you, Harsh.
Thank you, Shubdeep, and thank you everyone for joining the call. And very warm welcome to our annual investor presentation as well as the quarter 4 results. As we have done in the earlier presentation, I will take you through the part of the presentation and I will invite my colleagues to discuss some of the rest of the segment and eventually we'll do question answer. To start with, I'm on slide number 3, which talks about what is our vision. Our vision is to become the most admired yield vehicle in Asia, which is going to be based on a focused business model, value of creative growth, predictable distribution, and an optimal capital structure. While focusing on these 4 pillars in the vision, on slide 4, what we stand today is with a AUM of about 23,000 odd crores, 22,800 to be specific, spread across 20 states and UT, 61 different revenue generating elements between transmission lines and substations, 100 megawatt solar generation as on date, about 27 years of residual contract life, and a sizable amount of residual value in terms of, amount of metal that we carry with us. On slide 5, considering this an annual presentation, just taking through the evolution over the years, since inception, first couple of years, middle ages, I would say 2019 to 20 and 2020, 22 to 23 over the last couple of years. This portfolio is just to showcase how our portfolio has grown in terms of starting from 10 revenue generating elements to now 61, and it's going to grow further to 75 or 77 next year. Unit holder based diversification from a developer owned InvIT to financial sponsor owned and financially sponsor owned managed, professionally managed InvIT, to a variety of investors getting introduced starting from insurance company, NPS, pension funds over the last 6 years, and in general proliferation of market and liquidity increase with reducing lot size and diversified ownership. Along with that, our revenue, asset base, EBITDA and NDCF has also grown multifold. That's been the evolution of us over the last 6 years. Coming to exactly the quarter 4 quarterly update on slide number 7. There's been significant activity in quarter 4 till the board meeting in portfolio growth. We have signed definitive agreements to acquire Virescent Renewable Energy Trust, which is a AAA rated InvIT with an operational renewable assets for about 4,000 crores in size, subject to closing adjustment and customary approvals. IndiGrid AUM will increase by 18%, almost to 27,000 crores after acquiring this, and the renewable energy portfolio will stand at 674 megawatt peak. In the quarter, we also completed acquisition of Khargone Transmission Limited from Sterlite Power, an ISTS TBCB project with approximately 626 kilometers of line and 765 kV substations for about 1,500 crores. Financial performance augmented by KTL and the other acquisitions which were done earlier in the year and last year. Our Q4 FY23 revenue and EBITDA witnessed 9% and 6% growth respectively. Q4 collections were healthy at 114%, the trend which we have seen in the past. BPU was bumped up, I would say, ahead of the schedule in Q4 23 itself at 3.45 versus 3.19, which was in Q4 of FY21. This year, we have increased it quarter early, and we have increased it by a significant amount for this year and the next year. So next year, the BPU guidance is at 13.8 rupees a unit, which is approximately, again, a 4.5% growth over the last year of guidance of 13.2. During the quarter, we also raised one of the longest infrastructure bonds with 18 years of tenor with IFC with a very competitive terms and a stringent ESG and governance norm. And we are pretty excited about having IFC on board and also see it as a testament of ESG work IndiGrid is pursuing. Our AUM 2,800 crores, net debt to AUM at 59.5%, which left substantial headroom for growth considering the cap of 70%. Operating performance remained to be robust. We are at 99.6% availability at the end of Q4 FY23. 2.1 million safe man-hours achieved till now. And we commissioned our first battery energy storage system coupled with solar installation in one of our substations, which allows us to offset substation's auxiliary power consumption with green power, as well as it allows us to experiment with BESS at a working level to get our hands dirty and to provide us more insights and understanding to go for larger projects. All in all, this is kind of tallying up well with our strategy of delivering superior returns, sustainable increase in DPU, and stable operations. Going to slide 8 on Q4 FY23 update. While there is a lot of details, the top 3 point capture the summary is we do see accelerated addition of generation capacity to meet rising demand. And that's something I'm sure many of us have read it in the newspaper. In general, the demand has been growing consistently. And this is owing to the fact that the government focused a lot on rural electrification over the last 5 years, which is resulting into increased demand. And therefore, a lot of latent demand, which earlier was not served, to get them on the grid. And we think this is just the beginning. And overall consumption growth on the electricity side will continue to grow sustainably. What this would require is additional transmission networks, which will facilitate evacuation, both for renewable as well as stability projects. And we do see adding a lot of opportunities on that account on our business. In addition to that, a heightened focus on renewable generation and energy storage infra is also going to yield to both investment in renewable and energy storage, as well as in transmission sector. So we believe we are playing in a sweet spot of electricity growth that's going to pan out over the next 10 years. On slide number 9, Q4 FY23 operational performance, I'll invite my colleague Satish Talmale to join and take you through the quarterly highlights.
Yeah. Thanks, Harsh. Good afternoon, everyone. So starting with safety, we achieved our zero harm milestone for the quarter as well. 2.5 million safe man-hours have been achieved. We had 0 fatalities, 0 recordable lost time incident, and 0 first aid cases. Overall, on asset performance, we achieved 99.60 quarterly average availability for the portfolio, whereas from annual performance point of view, we are standing at 99.7. Solar generation with 100 megawatt plant, we achieved 61.20 million units, which are generated at 28.38% CUF. On reliability, typically Q4 has a lot of schedule outages for the correction of any plant identified issues, defects in the system. So which we take to, clean up those defects. Our trip performance is one of the best compared to our peers. And we achieved quite 0 to months in substation in a year. On digital asset management platform, I think all our assets are operational on the platform since last 8 to 10 months. Now we are heading towards advanced business intelligence platform, which will help us to take analytical decisions and enable faster decision making to improve reliability and safety of the assets. As Harsh already mentioned, the battery energy storage system is already commissioned, and this will help us to scale up for any large battery energy storage projects. On the right-hand side, the availability performance, we achieved our normal queue availability, and as a portfolio, we are at 99.7 at average level for the financial year performance. Again, on the key indicators point of view, quarterly comparison, the number of trips per line has slightly increased because of few weather-related events, but otherwise we are on track as far as our annual targets are concerned. There is an increased focus again on training manpowers, reporting culture on EHS, which is helping us to achieve our safety goals. Yeah, that's it. We'll hand over next to Naveen.
Yeah, thanks, Satish. So that brings us to our financial performance on the slide number 10 on quarter 4. As you can see on earnings table, our revenue and EBITDA stands at 9 and 6% year-on-year growth. Our NDCF generated is substantially higher at 18% at 347 crores for the quarter versus 293 the last quarter year-on-year. On collections, as I mentioned earlier, it's been a good quarter with about 114% collection, and that's been a trend that we have seen. Quarter 4 typically plays out in a higher collection. However, this is even higher than what we experienced last year. DSO days stands at 54 as of March 23, which is, while it's 4 days higher than March 22, but it's pretty much similar in line that we see of our usual days of 60 days. On the next slide, I'll just take you through the DPU growth journey that we've gone through, and our management objective is to ensure superior return, sustainable DPU, and stable operations. FY23, we did 3 acquisitions which enable us to grow DPU. First of that was Raichur Solapur, which is about 240 crores. Second was Khargone Transmission, which is around 1500 crores. Third was we signed a framework agreement with GR Infra, which is still not kicked in terms of our acquisition, but as and when it kicks in, it will add to the FY24 DPU. Also, FY22 acquisitions, which were the first solar projects, yielded the first full year cash flows in FY23, which in the FY22 were only for part year. In addition to that, we do see a pipeline of strong pipeline with respect to Virescent coming to closure probably in H1 FY24, GR Infra assets, Rajgarh Transmission coming to acquisition, and a strong pipeline on Greenfield Transmission and VSS. So we are pretty confident of further pipeline that's converting, that might convert into the overall asset base. With that in mind, we increased the DPU by 4.5% to 3.45 this quarter, and we believe that there can be an additional DPU increase by 2 to 3% once some of the pipeline acquisitions fructify in FY24 and stabilize. On the right-hand side, you can clearly see our overall chart of growth of DPU that's taken place over the period of years. The next slide is with respect to the details on DPU. So 3.45 consists of 2.53 of interest, 0.03 of dividend taxable, 0.026 dividend non-taxable. Again, I would urge all of you to check the respective income tax sections and your individual tax treatments, including capital repayment. Another income at 0.5. Net, we have distributed 241.5 crores for this quarter. The record date stands at May 18th, 2023, and tentative distribution date would be around 27th May 2023. NAV has remained pretty much stable at 131.62 versus last year. While there have been asset additions, there has also been risk-free rate increase, and therefore that is something which is balancing out. Going on the next slide is in consolidated EBITDA to NDCF waterfall. For the quarter, we had generated 525.8 crores of EBITDA at the SPV. There were total working capital capex movement and tax at SPV, which made the NDCF at the SPV at 6071 crores. 607 crores. Considering all the finance cost is at IGT. The 251 crore is at IGT, which is the finance cost getting reduced. An effective NDCF generated was 347 crores, the third blue bar. We distributed 241.5 crores, and we added to the reserve about 105 crores. And as on the year end, we would have reserve of approximately 322 crores, which is nothing but the 10% NDCF over the period of years. We tried to save and create balance for stable performance. On the slide number 14, Meghna, I would invite Meghna to take the balance sheet on that. Meghna, can you please?
Yes. Hi, good evening, everyone. I'm on slide number 14 on the balance sheet of IndiGrid. We continue to be AAA rated by all the three rating agencies, and we ended the year with an average cost of debt of about 7.53%, with a cash balance of about 1160 odd crores, which includes about 400 odd crores of DSRA and about 240 odd crores of distribution for Q4. The mix between the floating and the fixed rate borrowings continues to be skewed on the fixed rate borrowings. More than 3/4 of our borrowing book is fixed rate borrowing. We ended the fiscal year with a net debt to AUM of about 59.5%, and again a very robust interest coverage ratio of about 2.16 times. The gross borrowing ended being about 14,600 odd crores, which is spread between bank loans and NCDs, which is also diversified amongst various classes of investors. On NCDs, we have mutual funds, corporates, retail, insurance companies, domestic pension funds, and on the loans as well, subscribed by private banks as well as public sector banks. The average cost of incremental borrowing for the quarter, in line with the way the markets, debt markets have moved, was slightly higher at around 7.86%. Wherein we borrowed for close the Khargon transaction. Harsh has already mentioned about we raising about 1140 odd crores of NCDs from World Bank funded IFC, International Finance Corporation, with a tenure of 18 odd years. The chart at the bottom of the slide provides the repayment or refinancing schedule. So we are looking at a refinancing plan of about 930 odd crores for FY24. 50% of which is coming up in the next quarter, for which we already have the funding, and balance 50% is coming at the end of the fiscal. So we will be raising funds to refinance this facility as well. Rest of the years, as you can see, we have tried to ensure that our refinancing amounts don't cross more than 12 to 13% of the gross borrowing. Moving on to slide number 15, this talks about the total returns, risk-adjusted total returns to investors, both on the annualized part as well as the total returns part since the time we got listed. As you can see, we are again outperforming compared to all the pure play debt indices, which is the GSEC 10-year GSEC bond and the 30-year GSEC bond, as well as on the right-hand side, you can see we've compared ourselves to the indices, equity indices, both on the infra, utilities, as well as pure play transmission entities. And as you can see, we are providing a superior risk-adjusted return, risk being monitored through beta, which remains at the lower ebb of about 0.08 times. Moving ahead on the business outlook part, Harsh, you want to come in?
Sure. So on the business outlook, again, following the same principle on the portfolio strategy, we will continue to look and identify and acquire value accretive assets, which ensure consistent DPU and stable DPU growth. We will work towards consummating the pipeline deals that are existing, which is the recent acquisition framework with GR and some of the other bids that we are seeing. We will also actively looking to explore some of the specific greenfield bidding opportunities in power transmission and utility scale. And I think focus is to deliver on the increased DPU guidance that we have provided, and we are confident doing that. On the balance sheet front, as we have continued to maintain, we will continue to maintain adequate liquidity and optimize our interest costs and elongate tenors, which is allowing us to keep a robust balance sheet and not impacted by change in interest rates scenario. And we do plan to raise equity capital up to 1,500 crores to ensure that we use that to fund partly the recent acquisition and also keep adequate headroom for growth. On the asset management side, we will continue to work towards resiliency, and which would mean that we are able to ensure that our operations remain stable and predictable, and we maintain more than 99.5% availability across portfolio. We also migrated to self-reliant O&M practices across the portfolio. So sizable part of our portfolio is managed by IndiGrid's own teams and not by contractors, which allows us to ensure our costs are under check, our control on the asset remains better. And we are being able to do that by utilizing the right set of digital tools that we have invested over the last few years. Our priority will be to continue to ensure world-class EHS and ESG practices across our portfolio. On the industry stewardship, I think there are 2 points which we continue to work incessantly. First being maximizing private sector participation in electricity sector, both in greenfield, where bids should come for tariff-based competitive bidding, as well as national monetization pipeline, where we do believe that the right way of monetizing public assets is to call for an auction. And these two are strategic objectives which we pursue on the industry. And on the InvIT and REIT side, I think we continue to work towards increasing awareness on broader segment as well as stakeholders about what InvITs are and maybe by that virtue what IndiGrid is. So that's been the business outlook that we see for next year and key priorities. On the next slide, while our EGM notice is not yet issued, but many of the activities that we have described above requires approval of unit holders, and therefore we plan to call for an extraordinary general meeting soon, and that will be in the first week of June, which will be physical plus e-voting. And the first item on that which requires approval of unit holders is acquisition of Virescent Renewable Energy Trust and the units of Virescent. Along with that, acquisition of shares of Virescent's investment manager and project manager. These 2 items are linked to acquisition of Virescent. There have been many slides that we have published on Virescent. Besides that, along with this presentation, we will be publishing valuation report as well, which will provide a great amount of detail for unit holders to evaluate before voting. On item number 3, we have proposed to consider and approve amendment in investment manager agreement to add for provision of success fee linked to enterprise value, which again the details and the description and rationale is provided for in the presentation. Would be addressing any question answer related to that also in the call today. Item number 4 is linked to the capital raising approval of up to 1,500 crore by institutional placement, which I have mentioned above in the presentation. And the point number 5 is to consider and approve declassification of status of Sterlite Power as a sponsor of IndiGrid, considering that they own 0 or nil shares at IndiGrid or the managers of IndiGrid. So these are the decisions at EGM at IndiGrid in first week of June. We should soon be issuing the EGM notice, which will carry the requisite detail for unit holders to consider. However, the purpose of considering in today's call was to address any prima facie questions or clarifications investors might have. With that, I would take a pause and would open for question and answer, so there is adequate time for question and answer for this time. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1. First question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir, and congratulations on another good year. And it's very heartening to see the consistent increase in DPU over the last few years. So first question is, can you just clarify the leverage now and leverage post rights issue and the leverage post acquisition of Recent? Can you give me these three numbers? It'll be helpful. Yeah.
Sure. So the leverage now is approximately 59.5% as of year end, which is FY23. After acquisition of Recent, it will be, and again, the valuation report will get published, the closing adjustment might happen, but effectively it will be approximately 65% on closure of the Recent transaction. Subsequent to, depending on how much capital we raise, right, 1,000 crore or 1,500 crores, it will come back to probably sub 60%, right? So it will be in the same range, but the exact numbers are difficult to project in future, but it is 59.5 now. It will grow to approximately 65%, and it will come back to 60 to 62% depending on the size of the capital raise we do.
So the broader question is then that what is the future of the trust? Are you looking to, because this is only 60%, we don't have enough headroom. So are you looking? Should we expect more future raise in the coming years?
I think that's. I mean, we keep debating that question. We need to strike a balance because when we raise capital, we need to be able to see that we are still able to meet our DPU growth, right? So there is an optimal debt to equity that is needed in infra to be able to, I would say, juice up the projects and really provide the right yield. On the other hand, if we overlever, we run the risk of, being susceptible to impact of on the balance sheet. So we try to strike a balance between the two. Even at, let's say, 60%, today we had about 6,000, 7,000 crores of headroom from a purely regulatory perspective to acquire assets. But we are showing our inclination to raise capital preemptively after closing the Recent, which will take us to 65%. And the reason why we are raising capital is to be able to, keep enough dry powder to close further acquisition. So I think we have enough headroom to grow after Recent and capital raise. We'll have another 7,000-8,000 crores of headroom to grow without raising capital. That is sufficient, and that allows us to balance the DPU growth and the right DPU yield versus the growth potential. So I think it's a balance that we are looking to strike, and I think it's the right balance between 1,000 to 1,500 crore capital.
Understood, sir. So my second question is that you have introduced the fees which we are looking to get the approval from the unit holders. This is can you explain how does it work? This is work for because you need to, if you acquire an asset, let's say 100 crore, and you meet the guidance for this fiscal, and you get paid, or is it based on the 2-3 years of DPU guidance?
Yeah. So I think the further details will be there in the EGM, but the way we went about this is to really benchmark IndiGrid with, I would say, a wide variety of stakeholders in terms of asset managers. And today, IndiGrid fees are about 0.25% of AUM and subject to a cap of 1.75% of EBITDA. If you look at it, it's one of the lowest, if not the lowest fees that in any asset managers will be charging. And I'm not comparing with InvIT, whether it's mutual funds or AIF or other platforms, right? We also compared with other yieldcos in Singapore, Hong Kong, Australia, elsewhere, and we are still among the lowest in terms of fees. Now, what that does is to really hampers the, I would say, manager's capability to incentivize and attract the right talent. So what we wanted to do is to create a fee structure which is globally accepted, is an incentivize employees and manager for growth. And the way we have structured it is to have and introduce a success fee or an incentive fee on acquisitions, but payable after the financial year ends and when the financial year guidance has been met. Now, many a times we acquire assets in Q4, sometimes we acquire assets in Q1. So instead of every asset, you pay a fee which becomes difficult to judge as well as doesn't allow opportunity for full year of operation. So we have put a simplistic structure saying, let's say, for example, in FY23, the company has acquired X crore of assets. We will pay 0.5% of fee as one-time fee on that, subject to FY23 guidance being met. Right? So it will be a decision the manager board will be able to exercise at the end of the financial year, looking back for the last financial year. That is how it is designed at the moment. And I think it is still one of the lowest success fee if you compare with the global fund. So we have again tried to strike the balance between that. And investment manager as a company has also committed that majority of this one-time fee will be going towards employee incentives towards growth. So I think it kind of directly links with the employees.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Shalini Vasanta from DSP Mutual Fund. Please go ahead.
Hi, sir. This is Kunal from DSP Mutual Fund. So my question is in terms of leverage again. So like you mentioned, occasionally for this VRAT acquisition, you would reach a 65% mark, and post the capital raise, you will be again back to sub 60. So what kind of peak level of leverage you are comfortable with, and also in order to maintain a AAA rating? Yeah, so that was the only question.
Thanks. I think it's an interesting question. I think we have been saying that consistently. From a comfort perspective, we are comfortable with around 65% of peak leverage, but that's peak and that's comfort. So from a covenant perspective, we continue to maintain the 70% threshold which SEBI allows us. So if let's say Virescent was a little bigger, we might have been 67% and we would have been fine, right? But anything above 65%, it's out of our comfort zone, and therefore we would start looking to raise capital. So it's not like a covenant, but it is I would say, business strategy to ensure that we remain below 65% for both risk as well as agility in terms of further growth opportunity to materialize.
Understood. Thanks a lot, sir.
Thank you. The next question is from the line of Sagar Sangvi from ADD Capital. Please go ahead.
Yeah, thanks for the opportunity. First, two sets of questions on the recent acquisition that has been announced. One, intensity in the renewable space. You bought the asset at about 8 times EV by EBITDA. So what is the IRR that you are looking for all this kind of acquisition, and what is the hurdle rate for IRR? That is one. And two, you mentioned that the DPU will increase by 2 to 3% once the acquisition fructifies. Whereas the asset that you are adding is about 18% of the total asset base right now, and the NDCF that will be generated, that is 200 crore, would be about 20% of the current NDCF. So that should give a bump up of about 2.75 rupees on the existing DPU of 13.8, about 20% odd kind of thing.
Yeah. So I'll address your second question first, and you're absolutely right. Let's say if IndiGrid was comfortable managing at a higher leverage, right? Let's say 65, 67%. That means the entire 200 crores of additional NDCF that we would earn can translate into direct accretion to unit holders, and therefore 2-3 rupees of DPU accretion, right? But we think that is not the right way to run a platform, because we do want to grow further, and that means we are going to raise more capital. So when we raise more capital, we are going to issue more units. And therefore, when we issue more units, the 200 crore, depending on what is the size of the capital raise and other things, will get divided on a wider unit holder base, right? And that would leave not 2.75, but maybe half a rupee or a rupee of accretion, right? Yes, it is still not 2 to 3%. It can be more, but I would say if we give a guidance, we want to be 100% sure instead of, giving an optimistic guidance and not delivering on it. So yes, can it be more than 2-3%? 2-3% is approximately 40 paisa. Yes, it can be, but we would like to see integration, cash flow, how much dilution, at what price, 1,000 crore or 1,500 crore. Depending on that, we will give further guidance, right? But 200 crore directly adding to the 70 crore unit is not appropriate because we are going to issue more units. So that is the right way to look at it because we think that's the right way to run the business. If IndiGrid were to say this is the only projects that we are going to have, it might be comfortable with 65, 67% and DPU can grow and eventually, we can run the business like that. But we have chosen to always keep a headroom on DPU growth, both for risk and opportunities. And therefore, the DPU growth immediately that you may see may not be like, 10%. It may be 2-3%. That's to answer question number 2. Can you repeat your question 1, please?
So the kind of competitive intensity in the renewable space with you acquiring an asset at 8 times EV by EBITDA. So what is the hurdle IRR for this, and what is the IRR that you are paying to acquire this asset?
Okay, so I would, to be honest, refrain from using heuristics like EV EBITDA, and I'll give you why. One is 8 times EV EBITDA, maybe higher, maybe lower, depending on how much cash we are acquiring the company with, right? That is one. Second, it is also a function of how much is the residual tenure. So this company has around 18 years of PPA left, so accordingly gets valued. Again, all these numbers will be public valuation reports, so one can actually run the financial model exactly. Third is the EBITDA numbers that get published are kind of accounting EBITDA numbers. And what is the difference between that number and the practical number is straight lining. So under Ind AS, many of the EBITDAs which are higher now, later, lower tomorrow, get straight lined and therefore reduced. In some cases, it will be increased. So one needs to tie up to the actual cash generation and not just the accounting EBITDA in some of the renewable energy projects. So it is not, you might end up with a wrong conclusion either on a higher side or on a lower side in terms of both EBITDA multiple and profitability. So I would urge you to look at the valuation reports that get published, which will talk about the exact projections for each asset of Virescent that's going to be acquired to create a model. To answer the second question on that was what is the return threshold we acquire at? We do look at acquiring renewable energy projects at least 100 to 200 bps higher than what we make on transmission projects. I think the specific return or IRRs, I would refrain from communicating on that because there are a variety of assumptions that goes into that, starting from cost of debt, tax, repayment structure, all of it. So what looks like let's say a 13.5% IRR to us might look like a 11% to somebody else, right? So it's a nuance working, but again, all the information that is required to make the right judgment on that is available in public domain, in the valuation report, in our incremental cost of debt. So information is made available, but to give a threshold return that we make won't do justice on the call, both for inaccuracies as well as, competitive intelligence.
Got it. Okay. And the last one is, you mentioned you'll be reaching about 27,000 crore of AUM with the recent acquisition. So, and with the incremental capital, should ideally reach 33,000 odd crore of AUM that should suffice the capital need. So, any assets in pipeline that you have identified and looking to add over next 1.5 years?
Yeah, there are many assets in pipeline, but we can't comment on that till the time we sign something, right? So we got to wait for that.
Okay, fine. Thanks a lot.
Thank you.
Thank you. The next question is from the line of KP Kabra, an individual investor. Please go ahead.
Yeah, good afternoon, sir. Thanks for the good set of numbers. My question is the distribution of the income per unit. There are several parts: interest, dividend taxable, dividend not taxable. As an Indian investor, we are confused that which part is taxable, which is not taxable. So if you can help with a guideline or some CA certificate, I know that it would be difficult in earlier question, in earlier conference call, because it may be differ from the individual to individual. For the individual like me, who have 1,000 units and earning 12,000 rupees a year, it's difficult for me to give CA certificate paying 5,000 rupees. So with a disclaimer, can you please provide a certificate or any guidelines or any suggestions? Yeah. This part is taxable, this is not taxable in my hand.
Clearly.
That's all.
No. So I think Kaveri, I completely understand your concern and issue. We do provide that. So if you look at our distribution advice, which is called Form 64B, if I am not wrong, that captures pretty much in exact manner component, which will be, what is given as what under what tax provision, or 115 UA or 194 LBA or other provisions. So we do provide that distribution advice. I would suggest you to look at that. Second, we do provide something called FAQs. Right now, our FAQs are already available on our website. They are yet to be updated for the latest amendment that has taken place in March. We would be updating that. Between these two, I believe it will give you the right amount of guidance to make that judgment yourself. I don't think you need a CA certificate for that. However, I think it eventually, the way, as you know, India functions is that the liability of right filing of taxation is the individual's responsibility, right? Even if the government knows what is the tax accessibility, it is responsibility lies with the individual. We as a company cannot take that liability, unfortunately, but we are providing every disclosure required for you to file that return and also FAQ. But the FAQ will come up with a disclosure that please take our advice of a CA, right? Because we cannot take the liability of guiding people on tax, right? It is a specific subject matter and we won't know what other incomes you have. So I think there is enough disclosure if you look at Form 64B, which we are providing annually. Now we are going to provide quarterly, plus our distribution advice, which is that, and our FAQs, which will be updated. You will have adequate amount of information to make that judgment.
I understand, sir. I provide these FAQs and all the details of my chartered accountant. But they are not clear. They say that for the individual investment, you have to take care. Say, for example, capital repayment. Everybody is confused whether this capital repayment is taxable or not. Because it is not covered under this 115 UA or 194 LBA. Can you please suggest this particular component is taxable or not in my hand?
So, if you look at this budget, the announcement has come. It is part of the Income Tax Act now since 31st of March. 1st April onwards, we are not supposed to deduct TDS on capital repayment. As long as capital repayment is issued to the level of issue price of units, for our case it is 100, we are not deducting TDS, but cost of acquisition for you will be reduced. And therefore, when you actually sell the unit, if you sell the unit, your cost of acquisition will stand reduced to the extent of capital repayment you have received, right? Now, that is what I'm exactly replicating what is said in the Income Tax Act. But beyond that, I think you will have to interpret your financials in terms of how the tax gets computed.
No, my financial is okay, but my financial so far concerned are related to these units. For that only, because I have talked to many individual friends also who have invested in individual, and everybody is confused. Every chartered man is also confused almost. Because see, for a particular unit, they are not going to study so many sections. But anyway, this
for a particular unit
is quite helpful. It's okay for that, sir. Thank you.
Good. Thank you. Thanks a lot.
Thank you. The next question is from the line of Pratik Kothari from Unique Portfolio Managers. Please go ahead.
Hi, good afternoon and congratulations. My first question is on the transmission assets. One, if you can just throw some light about the availability which is out there in the market, the kind of pipeline that we are witnessing, and also in the context of the MNP, the power grid was supposed to sell some assets. Is there any movement on that side? We are tied up with GR Infra to bid for certain projects. So just some color comment on how things are operating there.
Sure. No, so we have a good pipeline, as I mentioned earlier. First, on GR Infra, I believe the project is moving on well. And as and when it is ready, we would look to acquire that project. On other 5,000 crores of bids that we tied up, we bid for 2 projects. We could not win because, as I said earlier, for us, profitability and returns are of most important. We don't need to acquire projects if they don't yield accretion to us, and therefore we stayed out of those bids. But there are still many of the bids which are left on transmission greenfield. We are looking at that, including battery energy storage. And we'll see, how many of those bids convert into pipeline. But it is subject to it meeting our risk return thresholds. But the pipeline looks to be healthy, and we will see which part of the pipeline eventually gets converted into. The next question was on power grid. We cannot comment on behalf of power grid, but I believe that I think the sale has not taken place. And as I said earlier, we seriously hope that such sale, as and when takes place, goes through a public auction process, because it is a public asset built with taxpayers' money, and therefore any monetization should go through a proper auction process. And I can only hope that Government of India will follow that as and when it gets done.
So even the process to build or auction has not started, is what you're saying?
Yes, the public process has not started. I don't know if there's anything else, but yeah. I'm not aware of any such process. Yeah.
Yes, fair enough. And my second question is on the new acquisition, the VRET. One, this 200 crores of NDCF which you mentioned, this is for the VRET trust, or this will be what will accrue to IndiGrid?
The audio is unclear from your line. Request you, sir, to please use the handset mode.
Sure, I hope this is better. Yes, so my second question is on VRET. The 200 crores of NDCF which we have mentioned, one, is that what VRET trust used to generate, or this is what we expect to accrue to IndiGrid? And second, I think we had mentioned somewhere that it went through a bidding process, and so if you can just highlight what the other bidders were at. And the reason I ask you this is in context of one, it seems a bit expensive, just prima facie, and I'm sure you did mention that you'll come out with a valuation report. And also it's a related party, and hence the questions.
Sure. No, I think extremely valid question. I will address that question first. We don't know who the second or third bidder were, because it's not that we have access to it. The process was run by one of the bulge bracket top banks, and we were asked to participate. We participated in that. It went through a professional diligence process, and all the bids were compared by the bank and shared with the Terra, which is the seller over here. So it has been an independently run auction process where we have participated from IndiGrid side. In our board meetings or investment committee meetings or in EGM, KKR, who is an affiliate of Terra as well as IndiGrid, would be refraining from voting. They did not participate in any of the board meetings or investment committee meetings, or did not have access to any of the diligence or terms that were shared at IndiGrid board. So that is kept at complete absence from participation from who can be potentially conflicted, and therefore we are completely kept away from them. In addition to that, as I said, they would not be voting either on IndiGrid side, where they are the shareholders, or on Virescent side, where there are shareholders. So this will be voted on both IndiGrid and Virescent side completely by minority shareholders other than KKR. So that's to kind of give you a perspective on they had zero participation at board. They will have zero participation in voting. And therefore it is kind of run as truly arm's length. But by that logic, it also means that I don't know who was the second or third bidder, right? Because the banker does not have obligation to tell us who the second bidder were. So we are not aware of the exact name. So that's on question number 2. On question number 1, I think you referred to on Can you repeat that? Can you rephrase that? Because it seems expensive as will disclose valuation reports, but if you can clarify.
No, just from the context of EV EBITDA or your the amount you're paying on per megawatt basis.
Yeah, correct.
It's different from what we paid last year to FRV, or in general what happens in the market.
Got it. Perfect. So I'll differentiate again. I would urge you to do a little bit of more work because we don't pay based on per megawatt. We pay based on what tariff we earn. The last acquisition we did had a much lower tariff than the tariff that is over here, and therefore price per megawatt may not be the right comparison. Second, I just answered in detail about the EV/EBITDA multiple. I would urge again not to look at EV/EBITDA. Pick up the model and probably do discounting. You'll get better answers on that after the valuation reports are public soon. And third question was 200 crore NDCF. I think that is for us. That is not what VREIT was generating. That is for us because we are going to finance it differently, run it differently. So this 200 crore estimation is based on IndiGrid's estimates, not on Virescent's history.
Okay. And what's the tariff here?
There are 16 projects, but I believe the weighted average tariff is approximately 5 rupees. But again, let the numbers get published, approximately 5 rupees.
Fair enough. And this last clarification, I mean, earlier we had stated that we have non-transmission assets, be it battery, solar, anything else, we would cap it at 25-30% of our AUM. That still holds.
That still holds, but I would not put utility energy storage into solar. It will be transmission. Even Government of India classifies it as transmission. But anyways, we don't have anything in BSS, so that's the secondary question. But to your primary question, yes, we would cap it at 25-30%.
Great. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Keyur Ashil from PNB MetLife. Please go ahead.
Yeah. Firstly, congratulations for a stable set of numbers. So I guess most of my questions have been answered, but just one thing, if you could provide some more color on the underlying assets that are being acquired in terms of quality of those assets. How does it fit into the criteria that we had earlier guided for in terms of PPAs, counterparties, operation track record?
Yeah. So I think, So what we like about the assets, that they've got on an average, approximately 7 years of operating history. Now, what that provides us is that it provides us exactly how the generation track record of assets were, right? And therefore, we don't need to necessarily depend on future guesses on how generation will pan out. So we have fairly good estimate of how generation would take place, right? Because 7-year operating history is fairly sizable. Second, majority of them are still with extremely good counterparties like NTPC, SECI, NVVN. Even beyond that, overall receivable cycles over last 2 years have improved so much, and all states assets also have under 90 days receivable. So we look at the receivable in a pretty healthy shape that we have seen. So good operating history, good quality of assets, good access to track record of generation, and lesser receivable days. So pretty much it kind of ticks almost all boxes for us.
Sure. Just one follow-up on the counterparties. So I think you mentioned about central counterparties. So if you could quantify as to what would be the share of central counterparties in the portfolio?
In our overall portfolio, okay, let me do the other way around. The total solar portfolio will be approximately 17 to 18% of our AUM,
right,
of IndiGrid. And out of that, approximately 12% will be SECI, NTPC, NVVN, and approximately 6 to 7% will be state, which includes UP, Punjab, and EI.
Right. Understood. And sorry, just one thing. I think you partly answered this question earlier, but just want to understand that till now we have been very conservative and let's say gradual in addition of solar assets. But now we have this rather large acquisition that is being planned. So could you also talk about the thought process? I mean, whether the share of solar will go up from here, will it reduce? What looks like an optimum level for us?
Sure. So I mean, we are still conservative and will remain conservative. But conservative doesn't mean we don't do large transactions. I mean, conservative means we wait for the right opportunity where we find good quality assets and at the right price. So I don't think there is any change in our strategy. We do not follow a particular optimum mix of solar we want to reach. There is a cap that we will follow, but we do not have a particular percentage we want to reach. We would remain neutral between transmission, solar, battery energy storage, in terms of which particular segment offers the best risk reward, right? And while transmission assets are good, but if the bidding and the price for it is so high that it results into lesser return than what we think is reasonable, we will not acquire those assets. And same exists for solar as well. So whether we acquire solar, transmission, or battery energy storage is not a function of what sector we like. We like all three. But what sector or subsector offers the right risk return for at that particular point in time? I think that is what our focus is on, to really do micro level analysis, not a macro decision. So I think it might happen that we remain at 18%, and it might happen that we reach 30%, but none of it is going to be by design. It is going to be decided by opportunities that come to us.
Understood. But subject to a cap, let's say about 30% or so, within that range.
Yeah.
Understood. Yeah. Thanks. This is useful.
Thank you. The next question is from the line of Pradyumna Dalmia from Lansdowne Investments. Please go ahead.
Hi, am I audible?
Yeah.
Okay. Hi, Harsh. I'll try to keep it brief. Couple of questions, one on the capital raise and one on the management fee. On the capital raise front, if you could give us some, idea as to what is the timeline of the capital raise and how are you intending to raise the capital? I mean, you've mentioned all various instruments, including rights issue, preferential issue, etc., and issue of debt security. So if you could give us some more clarity on that and also the timeline. And on the management fee bit, the 0.5% additional that you're proposing to charge every time we acquire an asset. So just want to understand the cash flow of that, impact of that, and where is that going to come from? Is that going to come from, the EBITDA, and I mean, how are we going to account for that and the cash flow of that?
Got it. Perfect. So, answering your first question, see, we are going to fund by debt to start with, and then subsequently raise equity, which is either institutional placement, preference issue, or rights issue. At the moment, I can tell you that we, or the board of IndiGrid, do not have a specific answer to what method we are going to raise that 1,500 crores, or up to 1,500. We might do 1,000 as well. I can tell you the criteria that, or other considerations that are there on our mind. Consideration on institutional placement is that it requires EGM approval, and therefore we are taking it right now. So it can be subsequently issued in next 12 months. Rights issue does not require EGM approval, but on the other hand, it requires filing of the prospectus. So when we do a rights issue, and last time we did a rights issue at a discount, we subscribed 98% of our unit holders subscribed, which was a great sign for us. But also there is a slight downside to that, is because the liquidity does not increase because the new investors do not get introduced, right, in a rights issue format. On the other hand, if you do an institutional placement, it allows us an opportunity for getting a good quality investors added to the register, which adds to liquidity, positioning, all of it, and which also helps current investors. But the balance between the two is dependent on at what price we do with the rights or preference or institutional, and we do not have those answers at this point in time. But the reason why we published it today is to give guidance that we will do it. We will do it in outer timeline 12 months. We might do it in 3 or 6 months as well, depending on the market conditions. But it's to give a guidance that we are not planning to run the platform at a peak leverage. We would raise capital and keep growth appetite. That's the guidance. At this point in time, I do not have more specific answers on exact pricing or method that we will use. As and when we do it, certainly investors will kind of announce that. On the second question on fee, consider it as a kind of it, and again, as you rightly asked, it's not an accounting treatment, it's a cash flow impact. It will be considered as part of the acquisition cost and therefore funded like that. So it will be like if we are acquiring something for 4,000 crores, let's say, give or take, there will be a 20 crore provision that will be made, payable next year after seeing the performance, but the provisioning will be done for 20 crores now, but the cash flow will happen a year after. So that is how we look at impacting.
Got it. Okay, thank you. Thanks, sir, for the clarification.
Thank you. The next question is from the line of Tanvir Sure, an individual investor. Please go ahead.
Yeah, hi Harsh. Thanks for taking the question. This question was you've already addressed this question right now regarding the taxation part. But for individual investors, it's really difficult because if I'm buying shares from the open market, I'm buying at random times. When I see the opportunity, I buy. So I may not have bought all the shares at 100 rupees. I might have bought it at 120, at 110. It's not that simple for us to keep a track. So what is your advice? As in, how do we keep this track of how much tax we should be paying? Because even like the other guy also said that even the CAs are confused, and honestly, we cannot keep a track of because some shares come at a particular price, some come at a particular price, the others come at a particular. So it's almost next to impossible, daily sit and just keep a track. I don't know how that's going to work.
Sure. So I'll suggest, again, as I said, it is my advice. Okay. And this issue has been dealt by, and we have discussed this with Ministry and CBDT, and there were right amount of data available. So let me put it like that. In a 64B, it will completely communicate the history of all capital repayment that is made and what date it is made, right? So let's say you acquire 100 units at 130, 100 units at 135, 100 units at 140, 100 units at 100, right? At different times you have acquired. Now what happens is the dates of those units are anyways important to calculate your capital gains, right? When did we acquire that unit?
Right.
Now, what will be available to you from us as IndiGrid, an obligation on us is to describe on what date, how much of capital repayment is done, right? So you have 4 tranches, 100 each, bought on different dates. You will know after that date how much capital repayment is done per unit from IndiGrid side, right? So when you sell it, you will know how much to reduce your cost of acquisition for which tranche of purchase that you did, right? So that's one, that information will be available to you from the company side on 64B. Second is, as and when IndiGrid is keeping track that it has issued at 100 rupees, as and when IndiGrid has already paid out its 100 rupees of capital repayment, it will start deducting TDS, right? So you will know that say it is going to be charged at a maximum rate, right? So you will know that. But at least I can tell you for IndiGrid, it is at least a decade away, right? Meanwhile, the computation is only if you sell the unit. You need to compute when did you purchase those many units. After that, how much of capital repayment has happened, reduce that from your cost of acquisition.
Correct. So your price of acquisition probably becomes slightly lower, I guess.
Yes, exactly.
Okay. So and just the second question I had is that I know that now there is a REITs and InvITs index which the NSE has already brought out. Any timeline as to when REITs and InvITs will actually be included in like the top line indexes like Nifty? Because right now also if you see, the liquidity is not as much when you go to buy it from the open market. I mean, sometimes the spreads are slightly larger. I guess that might be might be resolved by itself once they are included in indexes, and large institutions are then buying them. So any idea about that?
To be honest, I'm also waiting for that. So what I would urge you to do is to write to SEBI, write to NSE, write to Ministry, right? Okay. Because we have been at every door that we should be included. We meet the criteria. For whatever reason, it's been getting held up. So I would, at the end of the day, we are considered interested parties. If it comes from unit holders like yourself, it will carry more weight. And I would urge all the people to write letters to SEBI and Ministry on this. And that's the only way to make it happen, I think.
Okay, great. All right. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Sunil Shah from Turtle Star. Please go ahead.
Yeah, thank you. Congratulations, Harsh and entire team for this wonderful performance. Thank you very much on behalf of all the unit holders. Harsh, my question is in context with the IFC fundraise, the NCD issue which is there, which is mentioned in the presentation on slide 14, which is 11.4 billion rupees. So my question is...
Sorry to interrupt, Mr. Shah. The audio is slightly muffled from your line. Please use the handset mode.
Yeah. Is this better? I hope so. Is it good?
Please go ahead.
Yeah, okay. So my question is with the IFC NCD issue, the cost, the rate, the interest rate at which we are raising that thing for 18 years, that is one. Second, are we exposing ourselves to any kind of currency risk because it's an international offering? Is that the case? And the third point is whether, the refinancing schedule, which is just mentioned on the slide 14, is IFC, the NCD issue which is there, are we connecting the two, that in future also, whenever this refinancing thing comes in, we will have some kind of support from IFC on the fundraise that would be required? Could you please give us some clarity on that, please?
Sure. So point one, it is 7.7%, which is available because it's a listed NCD on the BSE page, it will be available. It's 7.7%.
Okay.
Two, is it FX? No, this is an INR denominated bond. So the FX risk lies with IFC, not with the company, right? Even though it's an international investor, it's a rupee denominated issued instrument. So we are not taking FX over here. And three, IFC did not provide further commitment. And IFC is an 18-year facility. So what will happen is what you see on that slide is without IFC maturity schedule. As we publish in Q1, you will see a revised schedule which will be including IFC, which will be a little more elongated, right? But IFC is just 1,100 crore out of 14,000 crores of balance sheet, right? So we do not see that getting materially changed. Rather, if you look at that slide, there is a part of refinancing that is already planned in this year, right? If you look at first chart that you see in that table, right, which is for repayment of loan, which is FY24 930 crores and refinancing. This is getting addressed by the IFC funding, or rather it's already addressed, right? So that is what is getting refinanced for an 18-year facility.
Fine. Fair enough. Thank you so much. Thanks for the clarity. Bye.
Thank you.
Thank you. The next question is from the line of Rajan Kapadia, an individual investor. Please go ahead.
Hello.
So your audio is not clear. Please use the handset mode.
Hello.
Yes, sir. Please go ahead.
Can you hear me now?
Yes.
Yes, sir.
Okay. So actually the question is regarding that board.
Mr. Kapadia, your audio is breaking, sir. Please repeat your question.
Just 1 minute. Board itself gives a distribution guidance, and then that also will be having impact on, additional acquisition. So will not that be conflict of interest? That's the first question.
Yeah, it is. See, it is conflict of interest, and therefore there are two things which are done. The board has communicated clearly that whatever income that is generated, a majority of that as an incentive will be paid to employees of the manager. Second, board is not the final authority, right? That is why it has come to unit holder vote. Where board is not voting.
Yeah, definitely, yes. Yeah.
It is for voting for unit holders, where board will not, KKR is not voting who is owner of the manager. So.
Okay. Now the second thing is it, this is the alternate part, when we reach 65% and all, and maybe we go with that equity issue also. After that, why should we acquire more? Because I am unit holder since maybe I think 4 years. So the prime motive when we did acquisitions was that it would directly make sure that our DPU is increasing. That was the main issue. At that time, we were having very less, not loan to value, leverage. We were having very less leverage. Now, when we actually reach at 65%, should it not be like that? We just stay there and let it run like that.
You're absolutely right. I think, if there is one way to run the business which says that we keep the debt equity at, let's say, 65-70% and not acquire any more projects, right? What happens is when we see an opportunity to acquire which will grow DPU further, right? What we have to do at that time is raise capital. Raising capital takes time, right? Whether it's preference issue or rights issue, and is subject to market conditions. And to be honest,
my question is not that. Let's say we assume that we will not move beyond 65. The question is every unit holder knows that beyond a certain point there cannot be possible DPU increase. That's the thing, because at the end we are not a business like thing. It's just a annuity kind thing. So that's what I was referring. Okay, because
that is where I think you need to look at it as like a business rather than just the annuity. We are not a set of 10 projects alone. We are a yieldco or an InvIT which is growing. That is part of our theme. Yes, 80 to 90% of our returns will come as an annuity alone, but 10 to 15% which will come as growth. So for example, we started with a 11 rupees DPU. Now we are at 13.8. That's a 2.8 rupees jump, which is about 20-odd%. It happened because we have acquired projects, right? So we are a business. We are in a business of annuity, if I can tell you. We are not an annuity. We are not a fixed term bond that you have bought and there will be nothing after that will happen. We are a business and we are in a business of annuity. That is the right way to look at us or any other probably InvIT or REIT. And that is how we are structured. It's not a set of projects.
That I understand, but most of that increase in DPU or increase in NAV was mainly because we were having low leverage and now it's very high leverage. That's the thing. Okay,
correct.
That was my concern.
Let's say now we want to grow from here, right? Let's say we are at 55%, you cannot grow anymore.
No. What I am saying is, if we grow from here on, we need to dilute. That's what the thing.
Correct. And we need to dilute in a way that the DPU still grows. Right?
Yeah. We are trading above NAV, so it's not a big issue. Yeah, that's cool.
Cool.
Yeah. Okay, thank you.
Thank you. The next question is from the line of Chandra Mauli, an individual investor. Please go ahead.
Hello, sir. My question is also pertaining to the same. See, now we are planning to raise of equity of about 1,000 to 1,500 through whatever way. But do you fairly think that is it the right time? It's trading at 139, 140. The yield is close to 10% at current DPU, approximately whatever I'm saying. No, because is it fair to raise equity at this level? Again, my question going to the previous participants. Is it, maybe if it is the right time, it is okay. If it is 160, 170 or whatever, hope I'll be able to.
Sir, I will come with a preference issue capital with you, put in 1,000 crore at 160. I can tell you we will go ahead with it. So I think that whether it's the right time or not is a very important question. I think it is the right time. because we do see other pipeline assets for growth, and therefore we do look to acquire. Whether it's fair or not, I think is subject to pricing, and if we are doing a rights issue at whatever price, right? I mean, I think it's fair because every investor will get a chance to participate. If we are doing a preference issue, I understand that, we need to do it in a way that, it adds value to unit holders who are not subscribing. So it's a balance between the two. But I would say quoting numbers like 165, 170 becomes fair is unfair and unreasonable. But I mean, if you are happy to put it money at that price, we will definitely make sure that we can raise capital at that price.
Why I meant to say 160, 170, it is not that you have to fix it at that price. What I meant to say is that the yield value will be in the range of around 8. So that could be the fair assumption I said. I'm not saying that you have to fix it.
I understand. No, I understand. I was just trying to, and I get it what you're saying. I think, as I said, if we are able to raise capital at 160, we will certainly do it, right? But at the end of the day, there is a difference between the price of any issue, whether it is an asset, whether it's a security, is whether there are adequate buyers at that price, right? And if there are no adequate buyers at 160, 170, should IndiGrid stop growing? My answer will be no to that, right? As long as we are doing acquisitions which are accretive to that particular unit price at which capital is raised, we do feel that IndiGrid should raise capital and acquire. If it is rights issue, it can be a discount because, everyone is getting to participate. So it's a balance between the two. As I said, I do not have any specific number both on capital raise, price or methods today. We take note of the suggestion for sure, but we do not have that guidance as of now. It's a guidance that we are going to raise capital. How, method, pricing will come back to you when we actually do it.
That's fine, sir. Fair enough. Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Malav Sherdalal from Praveen Ratilal Share and Stock Brokers. Please go ahead.
Hello, sir. Congratulations for good set of numbers. My question is related to, as a unit holder, we are not eligible to pledge the securities to the bank or any NBFCs, whereas promoter KKR is able to pledge and take the loan on it, because we want to pledge it for some days for the requirement. We don't want to sell the units. So what's your view on that? Have you communicated to SEBI or RBI?
So point one, as of now, to clarify factually, KKR has not pledged the units of IndiGrid. Just a correction of factual stats. Second, the treatment of securities is not difference between unit holders in any regulation, whether it's SEBI or RBI or any regulation. So if KKR or any promoter can pledge units, legally speaking, you can also pledge units. Technically, I understand that banks and NBFC are not accepting from retail shareholders because of classification, but they are waiving that off for corporate, sponsors. Right? I understand the anomaly, but as I said, even this question has come up earlier. I would urge you to write to SEBI and RBI directly. We as a company or as an InvIT going to SEBI saying allow our units to be pledged will receive a tremendous pushback, because I don't think that is the purpose which regulators would encourage InvITs to go and propose. So I would urge, as an individual unit holder, you have rights to do so, you have powers to do so. Please write to SEBI. If you require which department, we can help you on that. But please write to them. Coming from unit holders themselves, it carries a lot of weight for regulators. Coming from InvIT or the company, it becomes extremely biased. So while we have spoken about it, we have always been given who has raised this issue. Please ask them to write to us, right? So I would suggest you to write to them, because it is not that IndiGrid can do something different, right? At the end of the day, it is in the regulatory process between SEBI and RBI, largely RBI and SEBI. So I would urge you to write to them. We can help you. Our compliance officer can help you who to write, but what to write is up to you. But, we cannot write this to regulators as an invite.
Yeah, I will get in touch with compliance officer.
Thank you.
Thanks.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Subhadeep Mitra for closing comments.
Yeah, hi. I would like to thank the management for giving us this opportunity to host the call. Harsh, would you have any closing comments?
Yeah, thank you. And I would say thank you everyone for being present on the call. I really appreciate your questions. We try to address them to the best of our abilities, and I would hope that we have been able to do it. Our EGM for the key decisions would be issued soon. EGM notice will be issued soon. Look forward for your support and to the resolutions that are there. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Nuvama Wealth Management, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.